What is going on, investors? Hopefully, guys had a great day out there. It's time to talk about PayPal Holdings Incorporated, ticker symbol PYPL. The company over the last year is up 10%, but year-to-date stock's basically flat. The company just reported their Q3 earnings. We will get into them. We'll take a look at the revenues, the profits, everything that I think you need to know about PayPal. And now this stock is popping a little bit in the after hours. It's really bouncing around, but the news is generally positive. So we'll talk about, is this a bottoming area for PayPal from a technical perspective? Can we actually buy the dip on this one? Because like we said, this stock actually just a couple of months ago was up at $309, and now here we are trading in the after hours very close to about $240 per share. Talk about, is this an area where this stock, which has been on a steady decline for many months, can reverse things and start to head higher? Talk about that from a technical perspective here in a minute. Now, PayPal came out with their Q3 numbers. Revenues came in at $6.18 billion off of, I think it was $310 billion worth of payment volume, which that grew about 26%. And the revenues that PayPal took in, the $6.18 billion, that grew 13.2% year over year. Now, they did miss by about $50 million, but I don't think investors are super concerned. Now, in terms of the guidance, we have one more quarter left in the fiscal year 2021 for PayPal. They're expecting their revenue to grow about 18% by the year's end. Again, that likely will surpass what we did in the most recent quarter. They're also expecting total payment volume, which they abbreviate as TPV, that will grow 30 to 34% in the most recent quarter, which we'll cover here from a fundamental perspective, grew 26%. So obviously PayPal, like many payment processors, anticipate a good fourth quarter where there'll be a lot of money flowing through its system, buying gifts and all the types of things that we buy over the holidays. Now, moving on to PayPal's statement of income. We've got our 3 months ended here. Our left-hand column is our most recent year. And we see here our net revenues came in at that $6.18 billion. That's the figure I showed you here on the press release. That grew 13% year over year. Last year, we're sitting at about $5.5 billion. For the 9 months, we went from $15.3 billion up to about $18.5 billion. Again, this company is just steadily churning things along. Despite the increased competition inside its space, the company's doing a nice job just continuing to churn higher. We got transaction expenses. We've got transaction and credit losses. Now, when we looked at Square last week, these actually ballooned in the quarter. I was actually surprised to see with PayPal, they actually went down. We went from $344 million worth of credit losses last year down to about $268 for the last 9 months, basically cut in half. We had $1.375 billion in transaction losses. Now those tick down to about $700 million in the last 9 months. What does this say to me about PayPal? Nothing in particular, but what it does say about for the consumer broadly is that they are doing pretty good because they're not bouncing on their credit cards, or they're not bouncing, in this case, on their PayPal balance. Now, it could also mean that PayPal's system, in terms of extending credit and subjecting themselves to losses from customers, maybe PayPal is just a little bit more slightly sophisticated than competitors that haven't been quite around as long as a Square. We've got other costs in here, but they all seem relatively in line. Take a look at our total operating expenses here. Went from 4.5 up to this 5.1 billion. So our operating income ticked up a little bit, okay, from 977 to about $1 billion. And it looks like PayPal's kind of comfortably in about this $1 billion run rate, because you see here for the last 9 months ended, which is 3 quarters, you're timesing this number by 3 and you're getting very close to this $3.2 billion. In fact, you might be on the nose. So the company is just running kind of right at that $1 billion run rate. Well, maybe we'll give them credit for a little bit better quarter in the upcoming quarter. That's a $4.5 billion run rate. This company does have a $265 billion market cap. That's why this company has been a very aggressive in the acquisition space. And in fact, they floated a rumor out there a week or so ago that they were potentially going to buy Pinterest, which is, I think, a $30 or $40 billion social media account. So PayPal is actually looking to do some big things. And I think some of it has to do with the fact that their underlying business is very steady. Look over the last year on the operating income side. You went from $2.3 billion up to this $3.2 billion. Okay, $900 million over 9 months. It's good, it's great, but when you got a big old valuation of $265 on this one, the stock could go higher if this company wanted to kind of blow up this balance sheet to a certain degree. Now, could they afford a Pinterest outright in cash? Absolutely not. The company has short-term investments and cash looking in that $12 billion range. They don't have a lot of long-term debt on the balance sheet. They've only got about the 7.9, and at the beginning of the year, you had about 8.9. So all things being considered, this company could finance something through the debt markets if it wanted to. They also could issue more shares of PayPal, and I don't necessarily think investors would be too concerned, especially if they could bolt something on that had more explosive operating profits than a company like this. Now, from a cash flow perspective, again, very super steady. Look over the last 9 months over at PayPal. We pull down these net income numbers, but just look at cash flows. We went from $4.5 billion up to $4.56 billion, $5.8 billion. So basically the same on the cash flows year over year on a 9-month basis, relatively the same, up just marginally over the last 3 months. PayPal is just a steady business. Despite the growing number of accounts that they have, they do have a tremendous amount of competition out there as well when it comes to their services. All things being considered, not much else going on in the quarter from an investment perspective, basically down over the last year. Not a lot of financing activities. I think this company is just waiting in the wings, waiting to do something much bigger. Now, what could be big is if this stock bottoms out here between $225 per share and $240 per share. The reason why we're saying it could bottom out here is, look, this is basically a 1-year sideways consolidation chart of PayPal. This stock started back in December of last year at about $225 per share and rallied up to $309, came all the way back down to $225, went all the way back to $310, and then now is back here all the way again, very close to about $225, $230 per share. In fact, in the after hours trade, stock's basically flat from where it was earlier in the day. Now, as you can see on this sideways consolidation chart, there is not a lot of candles down here between 225 and 240. The vast majority of the candles are actually a much higher price. So here's how I would play PayPal from a technical perspective. If you like this stock, if you are a fan of this stock, you think it will go higher. Maybe they do an acquisition that benefits shareholders as well. Maybe they don't. Maybe they do some other shareholder friendly stuff. Well, this is a buying opportunity for you. Personally, I think if you want to be safe, let's just say you don't want to lose your principal on this one, I would put a stop loss down here at about $224, $225 per share. You break this, because we have tagged this level 225 several times. It has held every single time. The problem is when it doesn't hold, well, you're coming much lower on this stock. I would guess you're coming down here to 205, maybe even south of $200 per share. That'd be quite a hit. That'd be more than a 10% hit on your most recent purchase. I don't mind buying these shares here in the $230 range. Again, if you put this stop loss in place, understand too, the stock was up here at about $240 when announcing these earnings, and the stock got rejected pretty quickly. So this level at 240, pretty hard level of resistance. If you were to be able to break ahead of 240, I thought we might be doing this video because it looked like PayPal was walking up to this level when earnings broke over at PayPal. I thought maybe we could peak our head over 240. Well, a peak over 240, and then you've got to run on this one up into the 250s, maybe even 260s on that one. That would be the bullish break, is you need to get above 240 on PayPal. Otherwise, you're probably stuck down here in this lower end range. And the reason why I'm encouraging a stop loss is the longer you hang down in a low range, eventually the buyers just kind of tend to dry out, and then the sellers step in, and then all of a sudden this one drops because people are looking at AMD stock, they're looking at Nvidia stock, they're looking at other stocks that are soaring, and PayPal has literally been flat for a year. So there's some investor psychology that you have to think about, that people might want to exit a position they're basically been flat on, while as you can pull up a chart of Nvidia and the stock's probably up like 40% in like 2 weeks. And so you have to battle with that a little bit. I do like this company. Just understand this is a very steady business, and until they decide to change that through some big acquisition, I actually would have really loved this company combined with Pinterest, which we did a video on last week. That doesn't look like it's in the cards. Maybe PayPal is able to pull something else off. That was PayPal. Hopefully you guys enjoyed this video. I'll be back again soon with more. Good luck with your investments.